Are you ready to actually understand how to use moving averages? Moving averages used to be one of the most complicated things to wrap my head around and understand when it comes to day trading. Video after video, I would see somebody using the 10 moving average, the 30, the 50, the 100, the 200, and it left me confused, probably feeling how you feel right now. Luckily, I've spent 10,000 hours plus in the market, so you don't have to. Watching this video as well as subscribing to the channel will save you tons of time and help you on your journey to becoming profitable. Remember to like, comment, and subscribe to this video if I helped you, so you can help me too, and help this video reach others who are trying to find out how to use moving averages just like you. But without further ado, let's teach you how to use moving averages. 1. So what is a moving average? A moving average, also known as an MA, is a technical analysis tool that shows the average price of a security or asset over a period of time, and it's used to identify trends and potentially buy and sell signals in the market. A moving average is considered a dynamic support and resistance level because it constantly adjusts based on the recent price action. If you don't know what support and resistance is, it's basically a horizontal area where the price may bounce off of. So you can think of a moving average like a level of support and resistance that just moves up and down with the price. Part 2, moving average types. There are a few different types of moving averages. You have the SMA, you have the EMA, you have the WMA, and the SMMA. The SMA, also known as the simple moving average, is the most basic type. The EMA is the best for fast moving or trending markets where you need quicker responses to price changes. The WMA is a good middle ground between the SMA and the EMA, offering a balance of responsiveness and smoothness, so it's right in the middle. Then you have the SMMA, which is used for avoiding noise and smoothing out volatile or choppy price action. Number 3, the numbers. Arguably, this was the most difficult part for me to understand, but it's actually very simple. The number used in the moving average calculates the average price for the amount of candles. So if you use the 50 moving average, it will take the last 50 candles and calculate the average price based on the last 50 candles for your moving average you've chosen. And number 4, what moving average should you choose? The number you choose for your moving average is based off of you and how you want to trade, whether it's a short-term or long-term or swing trade. If you're a scalper, you may want to go with something like the 10 to the 50 moving average, and you may want to use a faster reacting moving average like the EMA. Sometimes, depending on the asset, I choose different moving averages based off of the chart and how I see price reacting to it. The typical numbers I've seen when it comes to moving averages is usually the 21, the 50, the 100, and the 200. So sometimes using the moving average that a lot of people use, it can give you a good reading on price. However, 95% of people are not profitable. So be careful following what everybody else does. If we take ourselves out of full screen, then we should be able to find our display panel. So if you go up here to indicators, you can find a bunch of moving averages. So first we're gonna start off with the simple moving average. You can choose any of them. I'm just gonna go moving average simple. So it pops on the chart right here and we can see price kind of bounces off, follows it decently well. What you can do is click on your moving average. You can find a moving average indicator at the top left. So right here is my simple moving average, and right now it's calculating the moving average of every 9 candles. So if you go to settings right here, then you can change it to whatever you like. So let's change it to 50. Let's change it to 50. So now you can see this becomes a 50 candle moving average. So it starts to take into account all 50 previous candles, and it finds the average price point right here. And that's how you use your moving average. If you want to see a moving average touching all of these, how I was saying before, to make it more natural, you just change it until you get that price point. So you can change your moving average to whatever comfortably fits you. So as you can see, I changed it to 21. So right now we have a bounce here. It goes over it, but not too far over it right here. And then it goes over it as well right here. So now what this can do is help you gauge your opportunities to maybe sell price when it's going down. So right here, once we get a bounce off of this 21 moving average, you could simply go down to a lower time frame and maybe look for a sell there. The thing that used to confuse me is you're gonna also get a moving average of 21 candles on this time frame as well, and it's not going to look the same. So now you can see the moving average on this time frame looks different. It looks very different. So you can't always use the same moving average for each time frame and expect it to still look the same how it was on this one, which it looked like this. So at this point, you could simply be looking for a break in market structure, which you could use anything. You can use a trend line break. You could use the break of this low, and you can set your trade setup for your sells with your stop loss above the high, and you can take your trade down. Now, if we go back to the higher time frame, which we were on the hour chart, you can see how you can find trade setups with the moving average. Same thing with this spot right here. We get close to the 21 moving average, but we didn't quite touch it, but that's okay. We don't always have to touch it. It gives you an average, remember. So if price gets close to it, you can start potentially looking for your trade setups again. So price got close to it. We can go back down on the lower time frame and look for another setup. You could easily just set up another trend line break. This could be your trend line break right here. Then you can wait for the break of a low and get in on another sell with the price targeting even lower. Let's see how this plays out. We're gonna go to a higher time frame charts to make it go a little bit faster. And bam, there you go. You have another successful trade using the moving average. And if you're trading very simple, then that's really the key to being profitable. Now, if you want to use the moving average on the lower time frame using the same moving average, you have to remember that it's the last 21 candles. So it's the last 21 candles on this time frame. So it'll be, let's say, somewhere around here. It's the average of these last 21 candles. Once we get a strong break and close below that 21 moving average on the lower time frame, and we also had the strong break, we also had the retest of the moving average right around here, that gave you your sell opportunity for price to continue to go back down. So let's see what happens here. We get close to our moving average, and as you can see, the moving average is kind of getting a little flat. So as I said before, the numbers that you choose to use for your moving average is just as important. For this, using the last 21 candles, if we wanted to take a longer term trade approach, we could change that moving average to a 50 moving average, a 100, or even a 200. So this time we'll look at the 100. So in the last 100 candles on the hourly time frame, this is the average price. So let's see what happens when price gets back up to that level. So now we're touching that average price point right now. So now if we go down again, as you can see on the lower time frame, the average price for the last 100 candles is super bullish right now. As you can see on the lower time frame, the average price is actually quite high right now. You would want to wait for price to get closer to this, break through it before you look for any potential sell opportunities on the other time frame, which is why if you go back out, price may just continue to go up at this point. Because you can see on this time frame, price is very strong. In summary, all in all, tailor your moving average to your trading style and plan. If you scalp or you day trade, then the numbers will typically be lower, and you'll probably end up using the EMA as your moving average because it reacts faster to the most recent price. If you swing trade, it may be better to use higher numbers like the 100 or the 200 moving average, and you may want to end up using something like the weighted moving average or the smooth moving average because it reacts a little bit slower to the volatile movement, so you can get in at the right time. I will be coming out with an advanced video on moving averages in the future that you don't want to miss. And last but not least, if I helped you in any way, do me a favor and like this video. Comment if you have any questions or concerns, and subscribe so I can continue to help you become profitable.